Imagine waking up tomorrow to discover that your savings, or your investments, even the cash sitting in your bank account, has fundamentally changed in value overnight. Not because of a stock market crash, not because of some new government policy, but because while you were sleeping, the entire foundation of global economic power quietly shifted beneath your feet. And here's what should terrify you. This isn't some future prediction. This is happening right now, this very moment, and almost nobody is paying attention. I'm about to show you something that will completely change how you think about money, wealth, and financial security. And if you stay with me through this entire video, you'll understand exactly why the next few years could either make or destroy your financial future, depending on what you do right now. Before we go any further, do yourself a favor and hit that subscribe button and ring the notification bell, because what I am sharing today is information that could literally save your financial life. The mainstream media isn't talking about this. Your financial advisor probably doesn't even understand what's happening. But here at Money Aftermath, we dig deeper than the headlines to show you the real story behind the money. So subscribe now, because you don't want to miss what's coming next. Let me ask you something. What do you think is the most powerful force in the global economy right now? Is it the Federal Reserve? Is it Wall Street? Is it technology companies? Wrong. The most powerful force reshaping our entire economic future is something most people would never even consider. It's the systematic, strategic, and absolutely ruthless accumulation of physical resources by one country that's been planning this move for decades. And that country is China. Now, before you click away thinking this is just another political rant, stop. This isn't about politics. This isn't about picking sides. This is about understanding the mechanics of wealth, power, and survival in a world where the rules are being completely rewritten. Because what China is doing right now is executing the most brilliant economic strategy of the 21st century. And whether you love them or hate them, you need to understand their game plan, because it's going to affect every single dollar you own. Here's what's actually happening on the ground, and I want you to really hear this. China isn't just buying random stuff hoping prices go up. They're not speculating. They're not gambling. They're systematically cornering the market on every critical material that modern civilization needs to function. I'm talking about the metals, the rare earth elements, the minerals that power everything from your smartphone to electric vehicles to defense systems to medical equipment. Without these materials, modern society literally stops working, and one country is quietly taking control of the entire supply chain. Think about semiconductors for a second. Every computer, every phone, every car, every piece of modern technology depends on them. Solar panels that governments are mandating for clean energy, they require specific materials. Electric vehicles that everyone says are the future, they need lithium, cobalt, nickel, rare earth elements. Defense systems that protect entire nations, they're built with specialized metals most people have never heard of. And China is locking down the global supply of all of it. Not just buying a little bit here and there, we're talking about billions of dollars deployed every single month with laser-focused precision. This is where it gets really interesting, and I need you to understand the genius of this strategy. Every dollar that China spends buying these physical resources is a dollar they're converting out of paper currency and into real tangible assets that have actual value. Think about that for a moment. They accumulated massive amounts of US dollars over decades by selling products to American consumers. Now they're taking those dollars and trading them for the literal building blocks of future technology and industry. It's one of the largest wealth transfers in human history, and it's happening in plain sight while everyone's distracted by news headlines and social media drama. Let me break down exactly what they're stockpiling right now, because the list is absolutely staggering. Rhodium, which is essential for catalytic converters and chemical processing, palladium for electronics and hydrogen fuel cells, platinum for medical equipment and petroleum refining. Rare earth elements with exotic names like neodymium and dysprosium that are critical for magnets and wind turbines and electric motors. Copper, the backbone of all electrical infrastructure. Lithium for every battery technology. Cobalt for battery stability and jet engines. Nickel for stainless steel and battery production. And literally dozens of other materials that civilization cannot function without. This isn't some conspiracy theory I'm making up. This is documented strategy backed by actual transactions happening in global commodity markets right now. The evidence is everywhere once you know what to look for. Unusual price movements in obscure metal markets, Chinese companies outbidding Western firms for mining rights in Africa and South America, massive increases in Chinese metal imports even when their manufacturing output stays flat, strategic reserves being built that are 10 times larger than anything Western nations maintain. The pattern is undeniable, and here's the kicker that should keep you up at night. China already controls between 70 to 90% of global rare earth processing. Not mining, processing. Even if rare earths are mined in the United States or Australia, they often get shipped to China for processing, because that's where the expertise and infrastructure exists. These elements are absolutely critical for everything from smartphone screens to missile guidance systems to MRI machines. Without them, technology stops. And one country has near total control. Now they're expanding that same dominance to every other critical metal category, systematically, methodically, with unlimited funding and infinite patience. If you control the materials, you don't just control manufacturing, you control innovation itself. You control which countries can build advanced industries and which ones have to come begging for permission. This is economic leverage that doesn't require military action or diplomatic negotiations. It's power that comes from owning the physical foundations of industrial civilization. But here's where the story connects directly to your wallet, your savings, and your financial future. And this is the part that should make you sit up and pay attention. Every ton of copper, every kilogram of lithium, every ounce of silver that China buys requires them to convert their dollar reserves into physical assets. That's constant, relentless downward pressure on the US dollar. They're systematically reducing their exposure to American currency and increasing their holdings of real, tangible materials that maintain value. The US dollar is already on track for its worst performance since 2017, declining more than 8% against a basket of major currencies. And we're only in the early stages of what currency experts believe could be a 5-year or longer downward cycle. This isn't a temporary dip that recovers in 6 months. This is a structural shift driven by fundamental changes in how global trade works and how countries choose to hold their reserves. When currencies enter these long-term down cycles driven by structural factors rather than temporary sentiment, they don't reverse quickly. Options traders on Wall Street, the people who literally make their living betting on currency movements, are extremely bearish on the dollar right now. And they're bearish for very specific reasons that have nothing to do with short-term news cycles. They're looking at the same structural factors I'm showing you: the systematic conversion of dollars into physical assets, the building of alternative trade systems that don't use dollars, the erosion of dollar dominance happening through thousands of individual transactions that add up to a fundamental shift in global economic power. Let me show you a perfect real-world example that illustrates everything I've been talking about. Look at what's happening in the silver market right now, because this story is absolutely wild. Silver prices have gone parabolic over the past year. We're talking about trading well above $76 per ounce currently. If you had bought silver at the beginning of 2025, you'd be sitting on gains of approximately 150%. That's not normal market behavior. That's a supply shock meeting unprecedented demand. Now, here's what most people don't understand about silver. It used to be thought of primarily as a monetary metal, something used for coins and storing value, but it has fundamentally evolved into something classified by governments as strategically critical. Why? Because silver is essential for advanced semiconductor manufacturing. It's needed for solar panel production at massive scale. Military defense systems depend on it. Aerospace applications require it. Modern medicine uses it. The electrical grid needs it. Without sufficient silver supply, entire industries stop functioning. And here's the supply-demand problem that's driving prices through the roof. Mining production of silver isn't keeping pace with exploding demand from all these competing sectors. You have too many buyers chasing not enough physical metal. Basic economics says prices should rise, and that's exactly what's happening. But the silver story gets even more interesting when we look at what's happening in China specifically. The single biggest shock to the silver market right now is coming from Chinese investors who have figured out something that Western markets really don't like to discuss openly. In the paper silver markets, meaning futures contracts and exchange-traded funds, there could be more than 100 contracts claiming ownership of silver for every single physical ounce that actually exists and can be delivered. It's essentially fractional reserve banking applied to precious metals trading. Once you understand that reality, the rational response becomes crystal clear. If you want actual silver exposure, you need to buy physical metal and take delivery. You cannot trust paper promises when the ratio is potentially 100 to 1. That's exactly what's happening in China right now on a scale that's creating genuine market disruption. Everyone wants physical metal, not paper contracts, not synthetic exposure, actual bars and coins they can hold in their hands. The demand has exploded to the point where we now have legitimate shortages developing in the Chinese physical silver market. And this is where the story gets absolutely insane. Silver investment funds operating in China are getting so massively oversubscribed that people are literally paying 60% premiums over the actual value of the silver. Let me repeat that, because it sounds too crazy to be true. Investors are willingly paying 60% more than the metal is actually worth just to get exposure through these funds. They're paying $1.60 for every dollar of actual silver value. That's not rational investing by any normal standard. That's fear-driven panic buying. Now, obviously, that 60% premium is extremely dangerous from an investment standpoint. When that premium collapses, which it eventually will, investors face catastrophic losses even if silver prices stay flat. That's reckless speculation. But here's what that behavior tells us about what's really happening on the ground. It reveals two critical facts. First, physical silver supply in China is so extraordinarily tight that people cannot acquire metal through normal channels at any reasonable price. The shortage is real and severe. Second, investors are genuinely afraid that they won't be able to acquire any silver at all in the future, regardless of price. So they're paying whatever it takes today and hoping prices continue rising fast enough to justify even these absurd premiums. The premium between Chinese domestic silver prices and international prices shows just how extreme the situation has become. Silver is trading above $80 per ounce in local Chinese markets. That's roughly 10% higher than the global spot price. In normal efficient markets, this kind of gap would be instantly closed by traders moving metal from low price regions to high price regions. The fact that a 10% gap persists tells you that physical supply is so constrained that normal market mechanisms have broken down. Now, I need to be completely honest with you here. What's happening in Chinese silver markets has absolutely turned into speculative mania. Mania, by definition, cannot last forever. There's a very real probability of sharp price corrections coming. Some selling is already happening as I record this. But beneath all the speculation and mania, there's a genuine fundamental story that's not going away. Chinese industries and investors are absorbing massive quantities of physical silver because they legitimately see its strategic importance for the future. And here's the critical insight. Silver is just one example of a much larger phenomenon. This exact same dynamic is playing out simultaneously across multiple industrial metals and critical materials. China isn't just stockpiling silver in isolation. They're systematically securing the entire periodic table of elements needed for modern industrial civilization. Copper for electrical infrastructure, lithium for batteries, cobalt for battery stability, nickel for metallurgy, rare earths for magnets and electronics, manganese for steel production, chromium for stainless steel, tungsten for industrial tooling. The list goes on and on. It wouldn't surprise me at all if state-owned enterprises are quietly accumulating billions of dollars worth of these materials in quantities that never show up in official statistics or public reports. This is strategic resource competition happening in real time at a scale that's unprecedented in peacetime. And most people have no idea because it's not dramatic. There are no explosions. There's no breaking news, just patient systematic buying month after month, year after year. If you're understanding the gravity of what I'm explaining, and you want to make sure you don't miss future videos breaking down these massive economic shifts, pause right now and smash that like button. Seriously, hit it. The algorithm needs to know this content matters so it reaches more people, and drop a comment below telling me what you think. Do you believe China's strategy will succeed in reshaping global economic power? How worried should we be? Let me know because I read every single comment and your insights help shape future videos. Also, share this with someone who needs to understand what's really happening with their money. Send it to friends, family, anyone who cares about their financial future. Beijing understands something profound that Western nations are only slowly beginning to grasp. Whoever controls critical materials doesn't just participate in the future economy. They control it completely. They determine who gets to manufacture what. They determine which countries can build advanced industries and which ones become permanently dependent. This is leverage that doesn't require military force or political threats. It's power that comes from owning the physical foundations of industrial activity. While Western nations are forming committees and writing reports to study the problem, China is moving with decisive speed. By the time those reports are finished and recommendations are made and budgets approved and programs launched, China will have already secured dominant positions across dozens of critical supply chains. The window for competition is closing rapidly. And remember, every ton of material China buys converts dollars into physical assets. That's constant pressure eroding dollar dominance through thousands of transactions that add up to fundamental change. Now there's another major factor that's going to significantly accelerate dollar weakness, and it's coming from a direction most people aren't watching: Japan. The Japan story is critically important because it involves some of the largest capital flows in the entire global financial system. The Bank of Japan recently raised interest rates and clearly signaled more hikes are coming. Most people don't understand why this matters or how it connects to everything else we've discussed. So let me explain the mechanism. Japan has been trapped with a collapsing yen currency despite raising rates. Even after increasing rates, the yen hasn't recovered its value against the dollar or other major currencies. This creates massive problems for Japan's economy because it makes all imports more expensive, directly feeding domestic inflation. The central bank is being forced into increasingly aggressive action because they have no choice. Saving the yen has become the absolute top priority. But here's their problem. Japan has government debt approaching 250% of GDP, among the highest in the developed world. That's an enormous debt burden. To keep hiking interest rates aggressively without causing debt service costs to explode and destroy government finances, they need to generate cash from somewhere. And the only realistic source is selling foreign assets, specifically massive quantities of U.S. Treasury bonds. Japan is currently one of the single largest foreign holders of U.S. government debt. We're talking about more than $1 trillion in Treasury securities. If they begin unwinding even a portion of that position to fund monetary policy and defend their currency, it puts enormous pressure on U.S. bond markets and the dollar. When a major holder starts selling, it drives bond prices down and yields up, which creates instability throughout the entire system. But that's only part of the Japan story. There's another mechanism equally important: the unwinding of the yen carry trade. For those unfamiliar, the yen carry trade has been one of the largest and most profitable trades in global finance for over a decade. Here's how it works. Investors borrow yen at extremely low interest rates. They convert those borrowed yen into dollars. Then they use those dollars to buy higher-yielding U.S. assets like Treasury bonds, corporate bonds, or stocks. They pocket the interest rate difference as profit. With leverage, returns can be substantial. This trade has funneled enormous amounts of money into U.S. markets for years, helping support asset prices and keeping yields lower than they otherwise would be. But the trade only works when Japanese rates stay very low and the yen stays weak or stable. As Japanese rates rise, the fundamentals deteriorate rapidly. The interest rate gap narrows, reducing profits. More importantly, the risk profile changes dramatically. You'd have to be completely reckless to keep borrowing yen at higher rates to buy U.S. assets when the yen could suddenly strengthen and financially destroy you. If the yen appreciates significantly in value, you have to repay yen loans using a much stronger currency. The amount you owe in dollar terms increases substantially. Meanwhile, the U.S. assets you bought might be declining in value as markets correct. You're losing money on both sides simultaneously. It's a double hit that can wipe out years of profits instantly. Every sophisticated fund manager involved in this trade understands the risk has become extreme. The math no longer works. The prudent move is to exit, and that's exactly what we're seeing begin. We can expect this carry trade to continue unwinding as Japanese rates climb higher. This isn't speculation. This is financial logic playing out in real time. When that carry trade unwinds, it means money flowing out of U.S. assets, selling pressure on bonds, reduced demand for dollars, and it's happening at the exact same time as all the other dollar negative factors we've discussed. These aren't isolated, unrelated events. They're reinforcing dynamics that compound each other. So step back and see the complete picture. Connect all these threads together. China is systematically converting massive dollar reserves into industrial metals, rare earths, and critical materials while building alternative trade systems. The dollar is already in a structural down cycle that historically lasts 5 years or more. Japan is preparing to potentially sell hundreds of billions in treasuries while carry trades unwind. Global trade patterns are shifting away from dollar transactions. Strategic resources are becoming more valuable relative to paper currencies. These are not separate events you can analyze individually. They're interconnected parts of a fundamental shift in how the global financial system operates and where economic power resides. The effects don't just add together, they multiply. They create feedback loops. Each factor makes the others more significant. The United States will very likely need to debase the dollar even further through money creation to fund its own belated strategic stockpiling of critical materials. That's more supply of dollars entering the system at precisely the wrong time. Both superpowers, the US and China, are now competing for the same finite physical resources. And both strategies put sustained downward pressure on dollar value simultaneously. We're watching a fundamental shift in how wealth is stored and how economic power is projected. Paper currencies are steadily losing relative value while physical resources and strategic materials gain importance. The year 2026 is setting up to be extraordinarily volatile for anyone holding significant wealth in dollars or dollar-based assets. The reserve currency is facing multiple severe structural headwinds all hitting at once. This isn't like previous dollar down cycles where there was one primary cause. This time, there are 4 or 5 major factors all working in the same direction simultaneously. Most mainstream financial analysts are dramatically underestimating how these factors multiply when they converge rather than simply adding together. Wall Street analyzes each issue in isolation. Trade policy in one box, monetary policy in another, geopolitical competition in a third. But that's not how complex systems work. Everything affects everything else. The interactions and feedback loops are where the real action happens. This is not just another market cycle that will reverse when the Fed changes policy or some trade deal gets signed. This is a generational shift in the structure of the global financial system. The framework that has dominated since World War II is being challenged not by military invasion, but by patient strategic economic positioning. China has been playing the long game for decades, systematically accumulating the physical foundations of industrial power, while Western nations focused on financial engineering and asset price inflation. Japan is being forced by circumstances beyond their control to prioritize yen stability over continuing to support U.S. markets with their capital. And the dollar is caught in the middle of economic forces it cannot easily control through traditional monetary policy tools. You can't just raise interest rates and make these structural problems disappear. Here's what this means for you personally, and this is where everything comes together. If you're holding significant wealth in dollars or dollar-denominated assets, the assumptions and strategies that worked perfectly for the past 50 years might not work at all for the next 50. It means understanding that real physical assets, tangible resources, and strategic materials are likely becoming more valuable over time relative to paper currencies. It means recognizing we are entering an extended period of monetary instability where traditional safe havens might not perform as historically expected. It means thinking carefully about diversification, not just across different stocks or bonds, but across different asset classes entirely, and potentially across different currencies and geographical regions. It means understanding the rules are changing and the change is being driven by forces much larger than any single central bank or government can control. This is why staying informed matters more than ever. This is why understanding these deep structural trends gives you an enormous advantage over people who only pay attention to surface-level news. Knowledge is your best defense during periods of major transition and uncertainty. The decisions being made right now by governments, central banks, and individual investors are going to echo for decades into the future. So let me know in the comments what you think about everything we've covered today. Will China's industrial metals stockpiling strategy ultimately succeed in reshaping global economic power? Can the US dollar maintain its reserve currency status through this transition? Or are we watching the beginning of a shift to a multipolar currency system where no single currency dominates? How are you personally thinking about positioning your finances for what could be a very turbulent 5 to 10 years ahead? I genuinely want to hear your perspective because these are literally the most important economic and financial questions of our time. Drop your thoughts in the comments, engage with other viewers. Have real conversations about this because that's how we all learn and grow together. And if you found this analysis valuable, if you think others need to understand what's really happening beneath the headlines, share this video. Send it to people who care about their financial future. Make sure you're subscribed to Money Aftermath because I'm constantly tracking these deep structural trends and bringing you insights that mainstream financial media either completely misses or deliberately won't tell you. I'm not beholden to advertisers or corporate sponsors. I can tell you the truth as I see it based on evidence and research. Hit that notification bell so you never miss an upload because we're living through historic times. And understanding what's happening could mean the difference between financial security and financial devastation. Thank you so much for watching. Thank you for engaging with this content. Thank you for being part of this community that values real information over sound bites. I'll see you in the next video where we'll continue following this story as it develops because trust me, this is far from over. We're just getting started. Stay informed, stay prepared. And remember, knowledge is power, especially when it comes to your money. This is Money Aftermath, and I'll catch you next time.